Hello everybody, welcome back to my channel. My name is Devren Cook and I'm going to be taking you through 5 simple steps to become a real estate millionaire. Now I know what you're thinking. You're thinking, Devren, come on. How are you going to tell me in just 5 steps how to be a real estate millionaire? I mean, that just seems crazy. $1 million, that's a lot of dollars. That's 1,000 times 1,000. Big deal. Well, guess what? I do have 5 simple steps for you, but in all reality, this is going to take time. The steps I'm going to give you, they are very simple, they're very straightforward, but you do have to apply them over a large amount of time in order to see the results. I'm not talking 50, 60 years, but you need to be at this for, 10, 15 years in order to see a large amount of returns. You can obviously speed this process up if you have a higher income and can invest more frequently, but the average person is not going to be able to just start investing and buying multiple properties every single year. If you can, then certainly you can become a real estate millionaire in a couple of years. But for most people, it's going to take probably 10 years minimum. So let's get right into it, guys. The first step that you need to take is negotiate a better deal. And what do I mean by this? I mean, you need to get a good deal on whatever real estate you're investing in. If you're buying a single family home for yourself, or you're buying your first investment property, you need to be able to purchase that property, and I might sound like a broken record because I've talked about this a lot lately, but you need to make money when you purchase the property. If the property is listed for X amount of dollars, you need to get those sellers down to as low as possible so that way you have the most upside when you go to sell in the future. And that way you have the most instant equity in the property that you just purchased, whether it's your personal property that you're living in or whether it's another property, an investment, a duplex, triplex, whatever it might be. So that's the first step, guys. I know it's very simple, but it's that you have to negotiate those prices down. You need to buy the property smart, and you need to make sure that you're making money as soon as possible, preferably at the closing table when you're actually buying the property. A quick example of how that can work is, for example, say you buy a property and it's been on the market for whatever reason, you're in a buyer's market, and the property's value is $250,000. If you're able to buy that property for $225,000, well, you just made an instant $25,000. That's not money going in the bank, but that's money that you're making based off of the value of the property, and now you have $25,000 in equity in it. Now here's the second step, and this is going to largely depend on how adverse you are to risk and how quickly you're able to purchase properties and how much money you're making and have available. The second step is just to buy more properties. It's very simple. If you're making $10,000 off of a property, each property that you're purchasing, you need to buy more and more properties so that you can continually making $10,000 every single time. I know it doesn't sound very easy when you think, well, how do I just buy 6 properties this year? It's not going to be that simple, but over time, buy more and more properties as you go. The third step, guys, is to trade up, okay? If you buy a property and you're just getting started out, you're in your 20s, your 30s, and you buy a property that's worth $200,000, keep paying on that property if it's your single family, and then as you go to trade up, roll that equity into the next home and buy that property smart as well, make money when you close, and you'll just be snowballing that equity. Another way that you can trade up is actually through strictly investment properties. If you buy a duplex, it's $400,000, and you're paying that monthly payment, and you're paying the mortgage down, and now you've got some more money saved up, well, you can cash out on that property, take your equity, and you can go move into, say, an $800,000 quadplex, and you can continually move up in price that way. Now, the fourth and the fifth steps are actual strategies that you can use. So step number 4 is to buy in areas that are appreciating rapidly. Now, for example, in Dallas, Texas, I can show you exactly where the areas are that are going to appreciate in value most over time. And those are the areas that you want to be in each of your states or cities that you're in. You want to be in those areas where they're going to see an explosion of growth or positive circumstances, whatever it might be, so that when you buy a house at $150,000, $200,000, you can go sell a property for $300,000 10 years down the road. For example, say you buy a property that's worth $250,000. At the typical appreciation rate of 3%, which is what we expect nationally in real estate, you can expect after 10 years that you're gonna make about 30% on your money, so you're gonna make $75,000. So you can, in 10 years, sell this $250,000 property for $325,000 and pocket to $75,000. That's good, that's appreciation. But wouldn't it be better to be in a high appreciation area that's gonna get you somewhere between 5, 6, 7, maybe even 8% appreciation? And let me show you how that would look. You could easily double your money just by picking a great area. If you buy in an area that has 6% appreciation versus that 3%, you're gonna make $150,000, double your money than if you would have just kept it in that area that didn't appreciate very much and only got you 3%. So this is gonna be a huge deal for you making money long term. If you got 8%, you know, you'd be making even more. So it's largely gonna depend on the area. Not everyone can predict it. It's not 100% foolproof, but there are some good signs in your areas that you can use and you can know about by keeping up on the news, consulting other real estate professionals, so that way you can make the best purchase decision. Now, going back to what I was mentioning, guys, about trading up, it's super important to do, especially in these high appreciating areas, because if you have a property, say you have a duplex that's $300,000 and you're making 5% return, you're gonna be making $15,000 a year just in that passive appreciation because your value is going up. But if you have an $800,000 property, you're gonna be making $40,000 a year at that same 5%. So having a property that's more valued is going to increase in value more over time than your smaller ones are. So that's another great reason, an example of how buying in the proper areas that are going to appreciate rapidly and trading up in property values and in homes is going to increase exponentially the amount that your real estate investment portfolio is worth. All right, guys, and the fifth and final thing, the way to become a millionaire in real estate investing is to force appreciation. Now, what does this mean? What I was talking about earlier was just passive appreciation, meaning you're holding onto the property, and because real estate values go up over time, so will your property. You're not doing anything special, it just happens. That's passive appreciation. Forced appreciation is where you actively do something to your property to force that value to go up. You're forcing appreciation. Examples, and the typical thing people do is rehabbing, renovating their properties. And so an example is if, say you buy the property at $150,000, you put $50,000 in, now it's worth $250,000, well, you just made $50,000. Very simple. Maybe it took you 3-4 months to do so. You're able to make $50,000 much quicker than you can make passive appreciation just through values going up. So between those two strategies, forced appreciation and passive appreciation, you're able to largely and quickly increase your real estate portfolio and increase your net worth overall. All right, guys, so quick recap. The 5 steps to becoming a millionaire in 2020 through real estate investing is: number 1, get a great deal on the property you buy. Number 2, buy the most properties you can in the quickest amount of time without over leveraging yourself or overstretching your finances. Number 3, you want to trade up. When you've held a property for a while and you're making more money and you have more saved, cash out on that property, sell it, and trade up to a bigger property that's going to increase more. Number 4, you want to buy in areas that are going to increase in appreciation rapidly, more than the typical 3%. You want to shoot for at least 5% in appreciation passively. And number 5 is forced appreciation. Rehab the property, renovate the property, buy the properties that need some work so you can do this, and you're gonna make money quicker, faster, and you're gonna become a millionaire. And that sounds great. That's all what we want. Anyway, thank you guys for watching this video. I hope you enjoyed it. If you have any questions, comments, let me know down below. Like the video, subscribe as well, and I'll see you later on.